I'm thrilled to have you all here as we explore one of the most dynamic and fast evolving industries shaping the way we shop, sell, and move money across borders. Payments in Europe are at a fascinating crossroads, driven by regulation, innovation, and shifting consumer expectations. From the growing buzz around account-to-account payments and digital sovereignty to pressures merchants face in navigating complex payment stacks, there's a lot to unpack. I'm joined by an expert panel to break down key trends, challenges, and opportunities, from PSD3 to pay by bank and everything in between. Whether you're a merchant, a payment provider, or just passionate about the future of finance, this session will give you the insight and foresight you need. So let's dive in. I'd like to introduce my panelists today, Paul Chandler, who's Regional Director Europe at Compass Plus, and Moshe Winegarten, CRO for Ecommpay. Gents, thanks very much for being here. Really appreciate your time today. As discussed, we've got quite a lot to kind of get through, but I think from the perspective of the listeners here, I'd like to just get a bit of scene setting in around the European payments landscape as a whole. So, Paul, I'm going to start with you, but from your perspective, how would you characterize the current state of payments across Europe?
Good. To start with, I simply said, Europe's payments landscape, in my view, has undergone a rapid tech-driven transformation. We've all borne witness to that, and the shift from cash to digital is nearly complete. You know, in many markets, just look at Sweden, almost totally digital now. And while innovations in instant payments, open banking, and embedded finance sort of redefine how people pay and actually get paid, the environment is actually more competitive over there, I think. Certainly customer-centric for sure, and profoundly secure, but also becoming extremely complex, as we're about to discuss.
Yeah, and Moshe, you come at this from a slightly different angle. What are your thoughts?
Yeah, it is good. Things have improved as technology's come in. I think for people new to it or haven't gone out their own home market, it's amazing when you look across Europe at the variation between country to country of consumer behaviors, consumer preferences on how they like to pay and how they expect the user experience to be. It certainly was enlightening for me as I grew in my career and learned more about payments. I think anyone coming from outside of Europe, has this realization that there's almost 30 countries there across those. But even coming out of the UK, and you walk from France to Belgium to Switzerland, right? And you've got Pay Conic, Pay Libre, bank contact, all these different things within there. So from a consumer perspective, locally within each market, they will be accustomed to certain payment types, and that's nice. Challenges are those might not be accepted on some international websites or buying from the US or other places, right? And the payment methods available to them. So it's certainly been improving. Open banking's added a new layer. BNPLs have become localized, which is good and also challenging. So it's ever evolving. I think there are very mature markets like the UK, which kind of use international card schemes where consumers is pretty standard, and other markets in other parts of Europe where I think it's still gonna evolve. And from a merchant perspective, I think, as Paul said, super complex, right? Super complex. Does it make sense to add all of these methods? How does it work? How do we service customers across all these markets and let them pay the way they want to be paid? And that's where I guess payment service providers who can step in to take away that headache.
Yeah, well, look, let's stick with merchants, as you've mentioned it there. So what are they getting right, and where are they still feeling those kind of friction pinch points? Moshe, we'll stick with you as you mentioned merchants.
Yeah. No, it's a really what are they getting right? I think merchants are becoming more and more aware, and that's really good. As I mentioned, for anyone in this industry, it is a journey to kind of realize how complex and how much choice there is. So it's really good merchants are more aware. And I think the challenges they're coming across is, what is the business case? Because there's a cost, there's time and effort, right? The business case on each payment method, and also some of them are far more expensive than taking traditional card, right? So what is the incremental value of the product they're selling, in the vertical they're selling, of a specific payment type? Does it really open up more clients for them, or does it cannibalize potentially cheaper card volume or cheaper open banking volume within there? So they are aware of more and they're asking more about things, but I think that they often need support on how do we choose, and is it kind of valuable, and also not all methods are available on all kind of payment gateways. So selecting the right gateway and the right partner, depending on the target markets you want to enter into. I think there are markets like Italy, which is a developed EU market, where I think there's still a lot of gateways and payment service providers which don't have the local payment methods available for that market. So yeah, some good things and some areas to improve.
Well, I see you nodding. I think you've got something to add there, but perhaps around that friction point, because you guys sit one step away from obviously the merchants from Compass Plus perspective.
Indeed, yeah, absolutely. I mean, as you quite rightly say, many of the merchants offer omni-channel, contactless cards, mobile wallets, buy now, pay later, etc. But they really do struggle, and the friction there around high cost, fragmented systems, checkout friction in particular. And certainly when they're expanding across markets and adopting to new technologies, we're not seeing the use of open banking, which you thought would have been much more widely adopted in that space. It's totally underutilized. Lack of consistent API means that monetization isn't being fulfilled and brought to fruition. And in many respects, there's a lot of uncertainty in the area of A2A still at this moment. So yeah, numerous integrations, regularity, AML, KYC, it goes on and on. So often passed down by the payment providers to the merchants. So lots of complexity, lots of costs, and lots of friction.
Yeah, I think it's fair to say that consumer expectation has changed, and reading up around this a little bit, I think the Pays, Apple Pay, Samsung Pay, etc., have really kind of led to that kind of change in what the consumer expectation is around UX, etc. Do you feel like, from a technology or an industry perspective, perhaps, that we're meeting those expectations, and are we meeting them fast enough?
Well, we're all consumers, and I, as a payments industry person, I look in depth at any payment mechanism that's in front of me, whether I'm at a cafe or in a restaurant, wherever. And trying to see where that friction is, see what pain points they might have, was it seamless, etc. But we live in a world as a consumer where we want it now. It's got to happen now, and if it doesn't happen now, you can walk. And for a merchant, that's the cart's been abandoned, or indeed they're getting churned. So I think, are we getting it right? I think we're moving in the right direction, but the consumer ultimately is king and will dictate. And we'll hear, quick enough or soon enough as to when we're getting it wrong. Yeah.
Moshe, you already mentioned quite a few sort of local payment brands there earlier on. I'm interested to know, looking at the European landscape, how consumers interact with those different types of payments. We're supposed to be the European Union, no jokes, inserted there, but we all know that there's sort of differences regionally, but are those differences getting closer, I guess, is the question, or are they still very, very standout?
So this is well, with regards specifically to payments, because otherwise it's a bit of a broad subject, right? Specifically with payments, it has been up until recently still very localized. There have been attempts in the past to kind of bring some of those together and consolidate. I think we now have two kind of key initiatives I'd call out, which is interesting to observe. One is obviously the European Payments Initiative, which is created the Wero wallet. They have bought and taken ownership of Ideal in Netherlands, the Payconic in Belgium, Paylibre in France, and will replace Wero, their wallet, which has started in Germany. I think the GiroPay has gone, so forth, kind of gone. So it started there as P2P. It will be going to commercial second half of this year. But it will eventually replace Ideal, Payconic, and Paylibre. So across those four markets, bringing in a unified wallet, I think is good. And I think to your point of reducing the differences, there is a different approach. I think is it the European PA or EuroPA, which is the association of trying to work with interoperability of other wallets. So you've got that between MBWay or Multibanco in Portugal. making that. I think the first initiative was announced between them, Bancomat in Italy, and Bism in Spain. Right, so their approach is, still keeping things localized within the market, but allowing interoperability. So consumers in those markets can do P2P across those different wallets, and in theory, I guess, also for merchants or websites offering those as a payment method, being able to accept from. Where there it's not trying to unify or rebrand under one brand, but it does bring them together and make them interoperable. So two slightly different approaches. It'd be interesting to observe how both succeed. Could be Wero will be very successful, but only be limited to those 4 markets. The interoperable approach, which is might be very successful, might even incorporate Wero, which would be great, and then Europe will come together. So there's definitely been some strong movement in the last year or so to reduce those differences.
Mm-hmm. Paul, anything to add before we move on to the merchant perspective?
No, I'm fine with that. Thank you.
Okay, good. Thank you. So yeah, we're going to come to our second big topic, which is to drill down a little bit. Gents, firstly, thank you for the great overview of what's going on in Europe. That's an excellent overview for anyone listening. But the idea is that we're going to drill into some separate subjects now, and the beginning there is to actually really go deep into what merchants are seeing from that payments perspective. And I think, again, apologies for a broad opener, but I think it does just help set the scene. And what are the biggest headaches that merchants face today when it comes to accepting payments? Paul, I guess if you wanted to kick off with that one, please feel free.
Sure. Yeah, I think today's merchants, in my view, they have a bit of they face a paradox. They have more payment options than ever before, but obviously, surrounded with complexity. So they've got rising costs, compliance burdens, fragmented preferences as such, and poor integrations are the main points, I think, when it comes to the merchants accepting payments. But the winners ultimately will be the ones that simplify the operations, localize intelligently, turn their payments, the payments mindset from being just a cost center into a strategic asset. I think that's absolutely paramount.
Mm-hmm. Moshe, thoughts on those issues of accepting payments here?
Yeah, I mean, just to kind of zoom out what Paul's saying. We did a study back in the last year on checkout optimization, right, and the drop-off rates. I can't remember. Most of them happen at 90% of the way through the journey, really at the point of payment, right? So merchants have always been, very focused on acquiring customers, getting to select items, and then convert at checkout. And there's lots of factors, but I think all indication is it stumbles at the payment, and that can be through to choosing not to pay, right, or the payment failure, right. Kind of that's how I break it up, right. And choosing not to pay can come down to the choice and having the payment methods available, various things. Failure can be optimized by things even like presenting in the right currencies, and as you operate across more markets, it's important to do. But ultimately, to echo what Paul said, right, the winners from a retail perspective are the ones who simplify it, and I think we're seeing that with obviously the kind of ubiquitous growth of the Google Apple Pay wallets, which are following closely on the heels of PayPal. The schemes have launched Click to Pay, which is an interesting one, and I think they've been very open to say this is not to try and replace Apple or Google Pay, but to kind of bring it to customers who aren't using either of those. But the benefits of the one-click wallets, besides the speed and ease, is reduced declines, fraud, etc. And I think the research we did and the results we got back was having more of those one-click buttons. Clearly, improved the checkout conversion, which ultimately is what a retailer wants to do to kind of take benefit of that.
Yeah. Okay. So we mentioned the kind of complexity, and we mentioned that I think someone said there that whoever simplifies will win. Are the current payment infrastructures helping or hindering growth of merchants? Because there's this proliferation and constant rollout of technology, right? And the merchants have to make a decision, and we'll come to cost on this in a minute. So I'm really just trying to focus in on on that kind of tech stack infrastructure?
Yeah.
And is it helping or hindering? Paul, do you want to kick off that one?
Sure. Yeah, I mean, the modern payments infrastructure, it's a double-edged sword. It opens doors to growth through reach, speed, and data, like any good infrastructure, frankly. But the reality of cost, fragmentation, and complexity still hold unequivocally many merchants back, especially as they try to scale. So, from my experience, basically, that those that try to or that can grow fastest are usually those using a modular API-driven platform first, like our ubiquitous Transaxis platform, and similarly offering local payment methods by market and by region. That's for sure. I'm sure Moshe can elaborate on.
Yeah, just to add or kind of a different perspective, helping and hindering. I think it's.
Yeah.
I think the questions are potentially a little unkind on some of the developments, because I don't think the technology is coming in a lot for the sake of it, right? The intent is always to help, but we need to recognize some of these developments and changes, or a significant amount, are driven in response to regulations, right, or driven in response to combating fraud, right? So things might have been perfect from a UX perspective, a consumer journey, and 6, 7, 8 years ago before SEA came in, but fraud was high, etc. Or it could have been perfect if it was only card, but the regulators wanted to open the door for A2A payments. So in response to those, new things have come about. That's added complexity. Then new technologies come in to try and simplify that. Then new regulations or new anti-fraud measures have been brought in place. So that's the constant evolution and cycle we're in. So I think, Alex, to your point, there is certainly changes coming which are hindering and slowing the journey, but they're driven for good reason, right? They're driven either in response to regulation or to combat fraud. And then the next cycle of evolution is then to try and finesse those, right, and improve upon that. And then obviously plays are then trying to bring it all together. I think I'm kind of keeping a keen eye on observing. Apple Pay recently announced they're allowing wallets to sit behind within the Apple Pay wallet. And so what will that mean? Kind of interesting to see. Will they ultimately be one button which incorporates cards and all the various wallets across Europe? That could be cool. So some interesting stuff.
Yeah, I think that is an interesting one to watch, actually, and a few brave souls have already sort of set off on that journey, haven't they?
Yeah.
But let's try to talk about cost and operational impact. I mean, how do merchants, given the proliferation, and some of it's driven by technology, some of it, as you quite rightly point out, is driven by regulation. How do merchants balance that innovation with cost and operational impact? Is it just a case of looking at it going, what do I need, or what do my clients want, and I'll do that? Or is there some other kind of secret sauce that they're looking for in that balancing act?
Back in the day when it was simpler, it was pretty easy. When e-commerce, I'm focused on e-commerce, but when e-commerce started, you would just get a PayPal button, because it really wasn't much in there. Then you had basic gateways, which like the Braintrees or CyberSource, where you could accept card, right? You look at it today, and some of the merchants kind of took that on directly. I was speaking to a big UK utility provider who built their own payment gateway, and kind of nowadays, with how complex the payment landscape has got, and then especially then branch out across Europe, and even just handling 3DS and 2.0 and 2.1 and all those things, it's huge. It's a huge amount for a regular retailer and even large merchant or business to handle, right? I think only if it really the uppermost tier ones can kind of break it down and take more ownership. The reality is, to navigate the challenges, Alex, you mentioned, merchants need to rely upon one or two, a handful of really strong payment service provider partners who can help them. Who either have the integrated technologies, simplified APIs where they can plug in and do that, and also the expertise to be able to support them and guide them on what they need to do. So in short, it was something which was manageable back in the day. I think now any kind of merchant who wants to succeed and without pouring too much resource into it needs a good PSP partner to take this on for them.
Okay, thanks, Moshe. Anything to add there, Paul?
No, that's fine. Thank you. Interesting.
Okay, no worries. So we're going to move on to our third subject. We've raised the spectre of regulation in the previous conversation, and we're going to move in not too many questions, but we can't avoid talking about regulation when we talk about the payments landscape in Europe. So let's kick off with the PSD3 initiative. Do you guys view this as an evolution or a revolution for the payments ecosystem? Paul, do you want to kick off with that?
Yeah, sure. Yeah, it's a really good question because PSD3 obviously heralded as the answer to all, but and for many it's going to be. So it's not a sudden revolution, is it? It's a carefully planned evolution. That's my view, with the potential to trigger revolutionary shifts in how payments and financial services actually work. So making payments faster, more secure, more open, and better integrated into our consumers' financial lives. And I think PSD3 certainly builds on the foundations that were laid by PDS2, but introduces key updates that could significantly reshape how payments and their financial services work. So I think it's great. It's certainly an evolution as opposed to a revolution.
Moshe, yeah, go on.
No, I'd echo that sentiment. So it's an evolution. It's a few tweaks, right? So PSD2 came out, and it was some big things, some big changes, and now it's kind of running. The SCA's in, strong customer authentication's going, but we're seeing little spikes in different types of fraud. So I think PSD3 then, opens up so businesses to be able to provide more data points for issuers to combat fraud. There's it allows PSPs to process some consumer data, without requiring the GDPR consent. So generally, it's good to combat that. There's a little bit of things in there on the fraud liability, which needs to be considered. I think one of the things which is interesting is delegated authentication. So back when I was kind of working on the scheme side, there was an assumption that the issuers had to do the authentication for strong customer authentication, but I think PSD3 calls that out, and that should improve the consumer journey. So if you have, let's say, a neo-banking app where you've done a face recognition or fingerprint recognition to log into that, and then you want to top up with your card, that shouldn't really need a second authentication, right? So it allows potentially the merchant there, in the case of neobank, or to do delegated authentication, and therefore there might be some liability shifts, but it will make a much smoother journey. And it could be the PSP will take on the delegated authentication, or even some wallets like Apple Pay. So it'll be interesting to see what evolves from that, and I think opens things up to improve consumer journeys. That's kind of cool. But then what's interesting really for especially for Ecommpay, I call that out, is some of the changes on accessibility. So we've been driving here Ecommpay for Good, really focused on inclusivity, accessibility. We've produced a digital accessibility guide, and so part of PSD3 is enabling strong customer authentication for vulnerable customers or customers who need accessibility who don't have a smartphone. How does it work? How does it look like? And for some of us, that's very foreign. Maybe it's voice recognition, so you can do it over the phone or various things. But I think one of the things we've been driving as part of that, I think only 5% of payment service providers are really focused on accessibility. I think we're well in the forefront of that. But the purple pounds, it's called, right, in the UK alone is worth 274 billion. I think we've seen. Or we have data that traffic and making your website more accessible, but let alone getting to the payment side of things, drives another 23 to 24% in consumer traffic, or you're able to access. So I think it's something that we've been focused on to drive. It's super valuable, important, and if you think about, a quarter of the population have some sort of accessibility need. So we welcome the regulator kind of pushing that, enforcing that, but I think ultimately it's not only going to benefit the consumers, it will benefit the businesses as well. So it's really good to see that.
Yeah, well, and also it's a great segue into the next question, which is really to do with opportunity or disruption. Does the introduction of PSD3, for technology providers in particular here, does it create disruption for you in what you're doing, or does it create, as you've just kind of proposed, that there are some really niche or interesting opportunities in there as well?
Yeah, I mean, from my view here is that PSD offers technology providers across the board a unique opportunity and moment to innovate and to expand, and also touch new revenue streams, which is ultimately what it's all about. So especially in open finance, APIs, and in the area of fraud management. So, but it's also equally brings demands and demands significant investment in compliance, security, operational excellence, etc. So providers that can navigate this complexity or this and the nature of this landscape with agility and customer focus will, in my view, unequivocally thrive. I think you should focus more on the opportunities that it brings as opposed to the downside or the disruptions. Sure.
And I guess it's kind of interesting. So that's from the technology provider. Do you think that this actually shapes or changes the way that merchants and customers will interact with payments, or is it just going to be all of this is held in the technology side, and what the consumer and the merchant do is it's not really going to be affected, or are there going to be any significant changes that merchants and consumers see from this?
I think to the contrary, this is to the benefit of merchants and the consumer. It shouldn't all rest with us as technology providers or as platform providers. Our job is to enable and facilitate this. So we welcome this, the PSD3 and the openness of it that it brings, and the evening out and the ironing out of some former issues. But I think the merchants and that should be thrilled at this. In particular, the open finance provides much richer access to financial data, people's investments, their savings, etc. And also as a major growth and demand there clearly for more API and integrated solutions with the merchants as well. So I think it's a major benefit for all of us, but predominantly at the front end.
Moshe, your thoughts on that?
Yeah, absolutely. There's benefits at the front end. It depends which part of the regulation we're looking at. Some of the changes in the background on kind of passing data across to reduce fraud, you won't necessarily feel that as a consumer, right? So there's a little bit in the background, but certainly then the other stuff which changes, like accessibility I mentioned, or things how dedicated authentication could change the journey, but and some points Paul mentioned on getting more data passed through as part of open banking allows third-party providers to kind of provide better experiences for their for the consumers. So there's a little bit of a mix in the regulation of stuff which is in the background for the financial institutions to manage, but things which will actually ultimately deliver benefits for consumers, which is nice to see.
Yeah, no, great. So it sounds like most people are viewing PSD3 these regulatory changes with a great deal of positivity, which is always nice. I know for those of us that have been around for a while, not all regulation is felt so warmly. So we'll close it off there, and we'll move on to our next topic, because it is pretty amazing that we've managed to get 29 or so minutes in, and we haven't talked about open banking. We've sort of glanced around it a little bit, but let's get stuck into A2A and pay by bank. That might be one of the problems, is that people hear open banking, but pay by bank is supposed to be the same thing, but why call it something different? And A2A is also the same thing, but it's called something different. So that might be part of the problem in the first question, which is, when we come down to these account-to-account payments, when we come down to pay by bank, open banking, however you want to reference it, why has adoption been slower than expected in certain markets? And the UK is one, right? I mean, we have a lot of interesting statistics that we see. We know that how great it's going, but the reality is when you compare it against something like card payments, it's not performed as well as it could have done, I think is how I would place it. But if you have insights on other markets where you thought that it might go mad but hasn't, I guess open to hearing about those.
I'm happy to take this one first. It's a mixed bag across different countries, different by different factors, right? So I think when open banking or A2A came through, there was definitely a belief, that they could simplify the consumer journey. Right? It was you don't need to enter your card details, and that kind of was the message. But I think by the time it kind of rolled out properly, Google Apple Pay had strongly taken hold, and actually the one-click journey in card payments was 1 or 2 clicks less than the open banking journey. So the UX benefit had gone. And I think was clear in card heavy markets like the UK, right? What is the consumer benefit?
Yeah.
I mean, Alex, I'll put that to you. What is consumer benefit? Why would you choose to pay by bank if you were shopping on a website as opposed to card? If it's one click by card because you Apple Pay, and I get that, I get the merchant benefit, but what's the consumer benefit?
Yeah, I totally agree, and I think there's part of this which is a secondary question, but we can introduce it now. You know, from my perspective, people talk a lot about the cost, right? Oh, it's so much cheaper, and then kind of my response is always like, yeah, but it's lacking a certain amount of robust protections that card payments have, like
Exactly,
like interest, like chargebacks. Yeah. So when you add all those in, once they get to that kind of critical mass, where there's a lot of them, and there's that will come with a lot of those issues. You know, does the cost remain as cheap as it is now by comparison to card payments, or do you have to factor in all of those other pieces? So, Paul, you know, I put it to you: how do A2A and card payments stack up when you kind of compare them head on like that, looking at the fraud and interchange and chargeback pieces? It's a tricky one, I think.
Yeah, that's a difficult one for me from a vendor perspective, as you can imagine, because the nuances of that are quite in depth and at a slightly different level. But I think for merchants, the A2A payments can mean lower overall payment costs and reduce fraud-related headaches as such. I mean, that's based on my discussions with many of whilst we don't deal directly with merchants, we have many acquirers using our platforms. But cards, unfortunately, do still remain, popular due to the familiarity, the universal acceptance, and established ecosystems that work. Frankly, I think the great lack, even for myself as a consumer, the lack of awareness on this, the lack of consumer education, and this is where the industry could do more, and maybe where merchants themselves, certainly large merchants with a big base, can do a lot more to help themselves if they're going to go down that route. So yeah, with regards to the nuances of interchange chargebacks against card and so forth, I don't have the best insights, so I'll hand over to my colleague.
Well, I'll come to Moshe on that in a second. If I may just stick with you one second, but from a technical perspective, Paul,
yes,
we're saying that it's not a difficult thing to do, right?
Not at all. No, not at all. And this is where we come back to next gen API driven platforms which move with the client base as opposed to being legacy and static. Okay, as payments evolve, the system moves with it, and so it's not that difficult.
Yeah. Okay. Thanks. So Moshe, sorry, your views on the previous question.
Yeah. No. Sure. So I put it to you that the benefits of it, right? And as a consumer, there aren't really any. It's driven, at least in card-heavy markets like the UK, by the merchant. As Paul said, it's faster settlement times. In theory, it's lower cost. And this is what's interesting. And Alex, to your point, the lower cost, right? It was lower cost because there's no interchange, because issuers are they're not taking liability or any fraud risk or all these kind of things. But we're now seeing the introduction of ABP fraud rules and liability within push payments to card, and someone's going to have to pay for that, right, and to offset those risks and liability. And therefore, I think it's going to even push the business case or the value of open banking. I think depending how it lands, we'll bring it into question, because that will push the costs up and bring it more in line with the cost of cards for merchants, right? So that's a whole separate conversation. If it's merchant driven and the benefits of it, and one of the benefits of cost, those might eventually be eroded. But overall, from a consumer perspective, adoption has been low in card heavy markets because there isn't a clear value benefit. If you go into other markets in Europe, which have never been heavy on the card schemes, let's go to Scandinavia, kind of Netherlands and Belgium, right? there's greater adoption kind of, and they've had something like that even before open banking rolled out. Because they're not competing at card, that they can replace what's already there. You have markets like Italy, where I thought it would have been good, where cards haven't been around, they've had to rely on prepaid cards, etc. But I think there, the complexity of the banking system itself has kind of put a few roadblocks in the way. Similarly, in France, the way the banks have managed it there as well. So you've got challenges from what's the benefit for the consumer to drive it. You've got challenges from the way it's implemented within the banking system and by the banks themselves, right? And then there's also an element of different verticals. So in verticals like retail, what is the refund experience, right? And so there have been ways to solve for that. And we've enhanced open banking solution to kind of mimic the refund experience, but it's still not quite the same or have the same consumer protections as you mentioned, Alex, as well within that. And again, I think that also hinders it within consumer verticals. We are seeing it ourselves in some markets, some slightly more demand from retailers doing normal retail transactions. But if I switch over and see where has it kind of got traction, and I would say anywhere where there's movement of money, right? So not typical purchase and refund, right? But where there's a movement of money, so loading funds into my neobank or loading funds into a stockbroking account or into crypto or paying my taxes, right? And certainly I think one of the biggest areas where you're seeing it and driving the transaction volume in the UK is repaying my credit card bill. So if you ever have a credit card app and you're not paying by direct debit, it used to be you could pay by card. That's now buried, and you're paying by open banking within there. So there are very specific ones where it works well, where you don't need refund capability, you don't need consumer protections, and the merchants or retailers themselves can almost switch off card. I was speaking with a very successful stockbroking provider within there. They had a cash ISA, and the volumes they were doing, and the cash ISA, they turned off card top-ups, and they only do open banking. The volumes were kind of staggering what they were able to push through there, because the UX worked and there was no demand, and it kind of flowed. So there are certain verticals where it works well, even in card-heavy markets like the UK. Obviously, in other markets, the banks need to support it and not kind of kill the flow and the UX and et cetera in the background. So is there, there's some winners and losers in the area, and that's kind of my take on where it's gone and how it'll evolve.
Okay, thanks, Moshe. Paul, anything to add before we move on?
Only with regards to the sectors. I mean, there's some industry sectors that you've alluded to there, which would benefit from this, and are open to utilities, B2B, large ticket e-commerce, ideally as well. Yes. Yeah.
Mm-hmm. I'd love to know what they saved on card fees as well, Moshe, but that's probably a private conversation at some point later on. Okay, chaps, we've got 4 or 5 minutes left, so we're going to just listen. I think there's a really interesting kind of area of the European payments market that has not really been talked about very much, but has sort of suddenly become quite a theme. And I'm talking about the sovereignty of payments. Mm-hmm. Where it feels to me like the European Union in general has kind of woken up and gone, how on earth is our entire payment system run by US companies, predominantly run by US companies? And, there's a bit of a knee-jerk reaction to how we do about it. We've talked about EPI, we've talked about EuroPA, but there's this growing desire within Europe for sovereign European payment solutions. What do you, and I appreciate that you may have to take off Compass Plus and Ecommpay hats here, and we're talking amongst folk who've been around the payments industry for a while. But what do you feel is really driving that push for European payments sovereignty? Whoever wants to go first.
In my view, it's about autonomy, isn't it? Surely, that's what's driving the European payment solution as such. So cost efficiency, certainly autonomy, data privacy, innovation, resilience, these are all important factors. But what's the real factor? Is it about reducing dependencies on the likes of non-European payment giants, the the majors, the big players, the Visas, the Mastercards, the PayPal, that dominate in Europe across various ecosystems, and a desire to reduce the reliance on these external providers, for sure, certainly plays a role.
Yeah,
I'm going to be a little bit more cynical. I think it's driven a lot by just patriotism and nationalism. Right? I think it's been bounded around for a while. It comes up every 5 years. I think we used to joke and call it PEACH, like Pan-European Automated Clearinghouse, right? And there've been initiatives like multiple times before EPI. EPI kind of looks like it's working, but all the banks join together, then they can never play together nicely. If it was driven for commercial reasons, like they figured they can make money from it, I get that. But is there a realistic fear that the US is going to control Europe via Visa, Mastercard? I don't really think so. I think it's very patriotic. Right? You've seen it in countries like France, where they've had carte bancaire and they've insisted on keeping the domestic network, and certain other markets similarly. And we just see it recur again. I think that the recent political changes in the US kind of driven it to kind of back to the top, the forefront of the conversation. But there's no. I think it's much more just about nationalism, and Europe should have its own one. You've got out of Asia, you've got Alipay, etc., WeChat Pay. You've got Visa, China Union Pay, right, which has significantly grown, and Europe doesn't have anything. Does it need anything really? I'm not sure, especially with globalization. Well, not only if Europe did develop its own one, we'd have to then get it embedded all over the world, because consumers are traveling more and more, right? And they're going everywhere, right? That's what China Union Pay are trying to get the acceptance of their payment methods in Europe as their consumers are traveling. So it's a phenomenal challenge, right, to try and do. And what's the real driver? I can't see any major risk or that we need to do it for. But that's, I guess, a little cynical view.
Sure. No, it's an interesting perspective. I mean, I see quite a lot at the moment about. I'm going to link to the digital euro because there's a query in there. But I see quite a lot about stable coins at the moment, and there's a clear drive on stable coins at the moment. And coming back to our earlier conversations, these are being introduced, and merchants are on off ramps, etc. They're seeping into everyday payments. But 99% of them are US dollar backed, not euro backed. And one of I guess one of my observations is there's just so much dithering, and it's the same in the UK and it's the same in Europe, where we have to go through 1,000 hours worth of consultations to decide whether something's a good idea or a bad idea. And by the time we get there, one of the other major markets has just got on with it, and it's obsolete because we're so far behind. And I feel that the same thing is happening currently with stable coins, and they're all going to be US dollar backed, because we still haven't made any decisions on the digital euro, guys. And that's the next question. Do you think it's viable? And do you think that it is the sort of initiative that could potentially take over from the global card schemes in Europe?
Stable coins are a really interesting subject, especially CBDCs, right? So central bank backed digital currencies. I want to separate that from my answer in response to European sovereignty on a payment system, because I think that the stable coin is very different. I don't think it's under threat. I think we do need it. So if there's within fiat backed or central bank backed currencies, there's something called seigniorage, which is a revenue stream for the central banks, right, which are issuing currencies. And I don't think they want to give that up. And I think it makes sense for them to move to digital currencies. Yes, it's a pain. It's taking a long time. Yes, it can definitely be evolutionary. I think if you look at the Circle, they've released the Euro C. Like they've got the USDC. They have got the Euro C. I think they didn't launch the GBP one simply because it's still the central bank and the regulator just haven't sorted themselves out yet. But I think it will come. So I think it's definitely something which is needed. We should have it. I don't think there's a real risk of it getting of losing out to USD, either a Federal Reserve stable coin or just a kind of an independent one like USDC within there, because I think there's still FX involved, because those are kind of backed by those fiat currencies. So within the local markets, there will be demand for stable coins within local currencies. But it's extremely interesting to watch. I don't think it'll come as fast as people hope, but I think it will come. And I think it is a good question. What does that mean for the payment schemes? I think they will evolve, because there are still areas where we get, businesses and merchants for acceptance need to handle those currencies. How will they be stored? How will they be exchanged? Et cetera. So I think that we might see a change in the roles that the schemes play and the PSPs play. But I don't see them necessarily disappearing altogether. There might be drastic changes, but I think we'll see some version of it still in the future.
Super, Moshe, thanks very much. It does look like, unfortunately, we lost Paul there at the end, but our time is up. So that's been a brilliant, broad conversation around the European payments landscape. I think we've covered off pretty much everything within the European payments landscape that we can do. So to Paul at Compass Plus and Moshe at Ecommpay, thank you very much for joining me today. It's been a real pleasure.
Thanks, Alex.